Well, hey there, everyone. Dave Keller here with Market Misbehavior. I'm the president and chief strategist of Sierra Alpha Research, and thank you so much for joining me today on my weekly show on StockCharts TV. We're taking the month of August off from our weekly market recap show as well as our Market Misbehavior podcast, but have no fear, we're planning to bring both of those back and better than ever in the month of September after the Labor Day holiday here in the U.S. In the meantime, happy to share some perspective with you here on StockCharts TV, particularly in terms of volume. Volume comes up a lot, and I often get questions about volume indicators and specifically why I don't use volume more in my own analysis. And I'll give you the quick version of that. It's basically because earlier in my career, I found that volume had a very specific conclusion that you could draw because a lot of the volume indicators were designed in the 1960s, 1970s, even earlier, where by tracking price movements and volume, you could really understand which players, which market participants were involved. And as time progressed into like the 70s, 80s, even the 90s, indicators like money flow became very popular as a way of measuring stock movements related to volume. Problem is the market's changed a lot, right? The structure of the markets has evolved quite a bit. And so I would say daily volume readings in 2025 mean something very different than they did in 1985. So indeed, I look very little at individual daily volume readings. However, I have found some of the indicators created by Mark Chaikin years ago, specifically the accumulation distribution line and the Chaikin money flow, I found very, very helpful because they help you understand the trends in volume or the change in volume over time. So today we're going to apply that indicator, those two indicators actually, to Nvidia reporting earnings this week on Wednesday, arguably the most important, potentially market-moving indicator this week will be Nvidia's earnings report. And so we're going to talk about volume readings along with some other volume-related charts for the S&P 500, a couple other charts as well. With that in mind here, let's look at the charts here. We're looking at the chart of Nvidia. A number of the charts we look at today are going to have this very same setup. So just to orient you to the chart you're looking at, we have the daily price action for the last 12 months. Here we're starting with Nvidia. We'll look at a couple other symbols here in a moment. We have the 50-day moving average in blue, the 200-day moving average in red. The bottom two panels include these volume indicators that I alluded to in the introduction. The accumulation distribution line is here, and then at the bottom, the Chaikin money flow. Now, I actually think of these indicators as very similar because they are. They're derived from the same general concept, which is applying the stochastics indicator methodology to volume. So let's take a big step back. George Lane is credited with popularizing this indicator called stochastics. As a matter of fact, a lot of people call them Lane's stochastics. And I'll show you that chart actually just while we're here. Let's see. If we bring up a stock, actually I'll just do it right here on IBM and then or on Nvidia, and then I'll change it. This indicator here is the stochastics. There's a couple different versions of that, the full, the slow, and the fast. But it's this indicator here, if you've ever seen it. This is called stochastics. And, you can see it ranges from 0 to 100. This is looking just at price action. So it's looking at the price of Nvidia over a certain look-back period. So it starts with a 14-day look-back, and it simply measures where is the price now versus the highest high and the lowest low over the last X number of days, in this case, the last 14 days, right? So it's looking back at about 3 weeks of trading and basically where are we at relative to the highest high and the lowest low over that period. So if we close exactly at the highs for the last 14 days, the indicator will be at a positive 100. And if we are closing at the lows of the last 14 days, the indicator would be at 0. But stochastics then uses a series of smoothing factors, so a 3-day smoothing to make the black line, and then a further 3-day smoothing to make the red signal line. So it's basically starting with that basic comparison and then using some moving averages to make it a little less noisy because the raw data can actually be quite noisy. All right, we'll get rid of that. So what I just told you in terms of the stochastics, if you take that stochastics methodology and look at where we close versus the high and the low, then make that comparison weighted to the volume. So if we close at the highs of the day, that day's volume is considered bullish volume, right? Because we close near the highs of the day, which means there's accumulation during the day. So that volume is considered investors accumulating share, pushing the price higher. So if we close near the highs of the day, that day's volume is considered all bullish volume. If we close at the lows of the day, that day's volume is considered bearish volume because there's distribution happening. If we close right at the middle, the Chaikin money flow doesn't really change, right? Because the up and down volume is considered even, and so that day's volume is basically not included. So where we close relative to the high-low range is how we weight the daily volume reading. So here we're looking at the raw volume data with the red and the green, red and the black bars. The black bars represent up closes. The red bars represent down closes for Nvidia. So instead of just looking at the daily volume reading and starting to draw long-term conclusions from just a daily reading, we have the Chaikin money flow. So the Chaikin money flow is looking at the last 20 days and basically doing that daily comparison. How much do we weight the day's volume based on whether it was more accumulation or distribution based on where we closed relative to the ranges? The Chaikin money flow is in green. That means it's a period of accumulation because over a period of time for that 20-day look-back period, we're seeing more up volume than down volume. If the Chaikin money flow is in the red below zero, then it's a period of distribution, suggesting there's more bearish volume days than bullish volume days, again, over that look-back period. Now, the Chaikin money flow does a simple kind of 20-day look-back period. So every day, it's basically telling you the volume conditions for the last month. But we could also do that calculation and do a cumulative value, similar to what we do a cumulative advanced decline line, and that's called the accumulation distribution indicator. So the Chaikin money flow, I think, is great as an initial assessment. What's the most recent volume trend over the last month is basically what this most recent data point is telling you. The accumulation distribution line is basically looking at a trend in that volume over time. So it makes sense if the Chaikin money flow is generally above zero, the accumulation distribution is going to be trending higher. If you would see the accumulation distribution turn lower and go below zero, you'll see the accumulation distribution most likely come down. The calculations are not exactly the same, right? There's some subtle differences between the two, but generally that's the relationship we would see. So with that in mind, what is this chart telling us about the conditions of Nvidia going into this earnings release? Well, overall, it says the conditions are quite positive in terms of volume, right? Now, from a price perspective, we're at or near new all-time highs. Nvidia made an all-time high on an adjusted basis, just below 185 earlier this month in August, with the rally that we experienced last Friday and the bounce off of the hammer candle that we experienced last Wednesday. Nvidia appears to be testing or retesting that previous high around 185. So pretty strong bullish price structure going into the earnings release. And we're above an upward sloping 50-day moving average, which is in turn above an upward sloping 200-day moving average. But let's look at the three volume indicators that we've talked about, just the raw volume, the accumulation distribution, and the Chaikin money flow. Starting with the raw volume, I would ask you this. Do you see more in terms of the volume bars? Which bars over the last month or so seem generally higher, the red down bars or the black up bars? I would say most recently it's been a little more negative than positive, right? We can see a series of these bars are red as opposed to the black bars, which are generally a little smaller, just down average in the month of August. That makes sense because we've had some down days here, right? We've had some down days in price. But again, this is not very subtle, right? It's basically saying if it's an up close, that's all bullish volume. If it's a down close, that's all bearish volume. So these indicators give us a much more nuanced reading about the trends in volume over time. So let's look there. The accumulation distribution has been fairly consistently positive, really since the beginning of April, which is when Nvidia, along with the broader markets, made a pretty significant low. From there, you can see the accumulation distribution line lit up in April. In most of May, late May into mid-June, pulled back a bit. But from mid-June to now late August, the trend in the accumulation distribution has been generally positive. So that implies is that overall, even though we've had some down days in volume, there's enough up momentum on those days, right? There's enough up days with stronger volume that it's counterbalanced rebalancing some of those kind of perceived distribution days that we've seen in the month of August. So while the price of Nvidia is retesting its previous all-time high around $185 a share, the accumulation distribution line has already made a new all-time high here in the month of August, given the strong accumulation that we're seeing, again, the trends in that volume over time. We can also see that generally bullish volume characteristic in the Chaikin money flow. And again, this is doing a 20-day look back, so it's basically looking back at the last month. You can see that the Chaikin money flow is well above the zero line, which tells you we're in a period of accumulation. Most recently turned negative in mid-June. This is when the accumulation distribution line came down a bit. This is when the uptrend off the April lows kind of slowed down. We had some distribution days in there, but we relaunched that bullish trend at the end of June. We can see about a week straight of up days in close. We can see that the Chaikin money flow went back above zero, which is more constructive. And now for about the last 2 months straight, the Chaikin money flow has said Nvidia has been in a period of accumulation. So what does this tell us going into earnings? Well, it tells us overall that investors are accumulating shares, and we can tell that by the fact that the price is going higher. We can certainly infer that by the fact that these volume-based indicators are both pretty constructive. What would cause us to be concerned about Nvidia? Well, forget about the price. I mean, obviously changes in price and changes to different indicators would be important, but in terms of volume, I think a rotation lower in the accumulation distribution line, similar to what we saw like in late May. The Chaikin money flow going below zero. Those would be two things that would tell me, even if the price is going higher, those indicators going down tells you that there's distribution happening kind of underneath the hood, right? And that can happen a lot of times with stocks that are still in uptrends. You'll see the Chaikin money flow actually start to rotate lower. I have an example or two of that I'll show you here in a moment. So for now, for Nvidia, volume telling us the conditions are good. The price obviously is holding up. These volume-based indicators tell you that it's still in a period of accumulation. I'm inclined to remain optimistic on a stock like Nvidia until these volume-based indicators rotate lower, and that would tell me that investors are starting to sell, right, or starting to really take profits in Nvidia. I'm not seeing any signs of that just yet. Now, we obviously can apply this same sort of methodology to any other equity. We can also apply it to ETFs, particularly more liquid ETFs that have quite a bit of volume, because we have good volume data we can use. Here we're applying this same methodology to the S&P 500 ETF, the SPY. So same thing, price at the top, the volume bars in the just below the price. At the bottom, we have the accumulation distribution line and the Chaikin money flow. Let's focus our attention on those bottom two panels. The accumulation distribution line, as you can see, has been overall incredibly positive for the last 12 months, but specifically since mid-April of this year. After that major low, we can see that the accumulation distribution line has made a new high every month. So that implies overall, coming off of that April low, obviously we've had some pullbacks along the way, but the volume structure has been generally positive. And again, because that line continues to trend higher. Think of it as like an advanced decline line for the S&P 500, right? Same idea. This line making new highs suggests we're in a period of accumulation. The bottom panel shows us the Chaikin money flow. We can see since the end of April, except for about 1 or 2 days in mid-June, the Chaikin money flow has been almost 100% in an accumulation zone, right, above zero. Even in August, as the S&P has been sort of choppy, sloppy, sideways at times, the Chaikin money flow has stubbornly remained above the zero line. So again, as long as the accumulation distribution keeps trending higher, as long as the Chaikin money flow remains above zero, it tells you the volume is not really indicating severe distribution. Now, again, you might be concerned looking at the raw volume data because you see some big days in red. But again, that indicator doesn't really pay attention to where we close within the range. So like this day in particular, we closed lower than the previous day, but it really was the middle of the range for the day. So the daily volume reading is going to make that day bright red because it says that was a down day in price. So that's negative volume. But these indicators look more closely at the dynamics of that trading day. And so it'll weigh that down day a little less negative because we kind of closed mid-range for the day. And again, that's the advantage of not just looking at raw volume data. What I prefer is looking at these volume-based indicators that are just a little better, I think, at respecting the relationship between price movements and volume. So similar to an Nvidia, similar to Nvidia, I would say the chart of the S&P 500 overall still saying we're in a period of accumulation. Volume readings, according to the accumulation distribution and the Chaikin money flow indicator, still bullish. What would cause me to get nervous going into September, which is, as a friendly reminder, one of the weakest of the 12, if not the weakest month of the 12 in a post-election year, and it's just certainly in over the long period, long history of equity markets in the U.S. So if market would rotate lower, these volume indicators rotating down, the Chaikin money flow going below zero would be a big red flag for me, suggesting there's investors really selling into strength. We're not observing any of those signs just yet as we get into the last trading week of August 2025. Now, got to show you some examples of where this indicator does not look so bullish because they're out there, right? We can find them. And I'll show you, by the way, in a few moments, I'll show you how you can use the StockCharts platform to actually scan for stocks that are seeing a bullish or bearish rotation in their Chaikin money flow readings. Here we can see the price of Walmart, obviously a big box retailer. We had a lot of earnings in this space here recently. I think Walmart, last week, right? That was last Thursday they reported earnings. So we can see in the price of Walmart, obviously a gap lower on earnings, and then we've continued to drift lower. So these three red bars are Thursday, Friday, and now Monday's session because we're again trading lower through the course of the day, pushing below the 50-day moving average actually yet again. Now, let's look at those volume-based indicators we talked about at the bottom and see how they differ from what we talked about with Nvidia and the S&P 500. Here, of course, we can see that at least the accumulation distribution line is now flat, right? It's certainly not trending higher like we saw in March, April, May. Sort of stabilized and going sideways, which makes sense as the price of Walmart is retesting that February peak, and for now, it looks like a big double top pattern for Walmart. But what concerns me is in the last couple weeks, we're seeing the accumulation distribution line actually make a new 3-month low. So instead of trending higher on weaker price action, it's actually trending lower, which tells you there's strong volume on down days, which tells you we're in a period of distribution. The Chaikin money flow has actually been toying around the zero level since the end of June, really. We can see here just again today, here on Monday, we're seeing the Chaikin money flow rotate down below zero. That's the kind of warning sign I would be looking for on the price of, or on the charts of Nvidia and the S&P. This is what that can look like when the accumulation distribution line starts to break to a new swing low, when the Chaikin money flow goes below zero. Now, again, I don't think that means you abandon traditional technical indicators. I would still be using moving averages and trend lines and support and resistance levels, all those other things in the technical toolkit. But these volume indicators can tell us that there's distribution that's starting to really emerge. And again, Chaikin money flow going below zero is one of those things that really gives me pause. Brinker International, ticker EAT, E-A-T, is another great illustration, I would say. And this is one I alluded to earlier where there's divergence, right? Look at what happens, right? Normally when the price is going higher, you would assume that volume-based indicators would be going up because price goes up because of greater demand. If there's greater demand on greater volume, these indicators should be trending higher. That's certainly what you saw in January of 2025. When the price starts to sell off, if there's more distribution, you will see these volume-based indicators start to trend lower. So generally, you can assume that the price and these volume indicators would generally be moving together, but not always. And I would say June of this year represents a perfect example of where we can see divergences. This is another thing I would be looking for on the chart of the S&P and the chart of Nvidia. What if the price keeps going higher, keeps drifting upwards, but these volume indicators rotate lower? You can see that happening in the month of June as Brinker was retesting its previous all-time high from February of 2025. You can see the price trending gently higher, but look at how the accumulation distribution line goes sideways, starts to trade lower. Look at how the Chaikin money flow actually made a new high in early June, but then trended lower in the month of June, right? So as price is going higher, Chaikin money flow is trending downwards. So what that implies is that even though the price is gaining on the upside, there's enough volume on those down days happening that it's indicating that investors are selling into that strength, right? Selling on strength would be higher prices weaker volume readings, and that's exactly what we saw in June, and that preceded a big decline in the month of July. We can see we traded down to the 50-day and eventually broke the 50-day moving average. As that was happening, the accumulation distribution line made a new swing low. The Chaikin money flow actually broke below zero. So by sort of mid-July, you're kind of seeing everything start to weaken as these volume-based indicators, which had started to show signs of concern in June, were really, the price finally agreed with that deteriorating volume picture by actually starting to break down in the month of July. For now, by the way, it's maybe a bit of a question mark, right? We've pulled back to the 200-day moving average for Brinker, which is often where stocks find meaningful support. You can see that the Chaikin money flow has actually gone back above zero, which tells you there's a bit of accumulation happening here. Again, from a technical perspective, I would like to see an improvement. I would like to see a rally in the price of Brinker, ideally getting back above the 50-day moving average, which is where some of these previous counter-trend rallies started to stall out. So that, I think, would become a much more bullish structure in terms of price. But I wanted to highlight this example in particular to show how divergences with higher prices on weaker volume really suggest distribution occurring, selling on strength, where the price action still appears quite bullish, but the volume is telling you to be a lot more concerned. So another thing we might want to look for on the chart of the S&P 500 and Nvidia. Now, if you want to learn more about these indicators, two things I would point you to. Number one, remember that you can scan for these. So if you're looking for other examples, I found some of these by actually using our scanning engine on StockCharts. From the StockCharts website, again, the top panel has changed a bit here recently. So if you're a longtime subscriber to StockCharts, which I hope many of you are, if you go to Scans and Alerts, go down to the sample scan library. The team at StockCharts, Grayson Rose and others, and I actually contributed a number of scans that are included on this. These are scans that we run in our own logins all the time, and so we now included those as sample scans. And if you go down a little bit into the indicators section, you'll find some volume-related ones. Here's just classic volume gainers and volume decliners. That's going to look for changes in the raw volume data. But if you go down, you can see improving Chaikin money flow, declining Chaikin money flow. I would encourage you to edit those scans if you're interested. You can see how the scans were designed. You can change some of the values if you're not getting any good results to make it a little more or less sensitive. But I would say there are definitely ways that you can use this scan engine to identify stocks that have been showing very positive Chaikin money flow and now starting to show declining Chaikin money flow, which is one of the examples we talked about. Same thing in terms of the accumulation distribution line. If you want to learn more, specifically the math behind some of those indicators, I kind of glossed over the details on that earlier on the StockCharts website. Go to the magnifying glass in the upper right, type something like Chaikin money flow, and hit enter. It's going to show you these results. This first one is a article in the StockCharts ChartSchool, which is a free resource that I've used so many times in my 25 years as a technical analyst in the financial industry. As I was learning technical analysis, I used the ChartSchool on StockCharts liberally, and I would encourage you to do the same. This will actually show you the formulas behind the Chaikin money flow and other volume-related indicators, help you understand a little bit more, and also feature some great examples to help you make sense of things. That's it for today. I'm curious what sort of volume indicators you use in your own trading. Drop a comment below. Let me know if there are other volume indicators on the StockCharts platform or elsewhere that you found very, very helpful. As a reminder, we're taking the most of the month of August off from our daily market recap show called Chart This with Dave Keller and our Market Misbehavior podcast. But have no fear, we're just taking a break, reassessing and refreshing and all of those good R words. We'll be back and better than ever after Labor Day in about a week. So look forward to bringing some daily market perspective and other things on my YouTube channel called Market Misbehavior. For now, I will say have a fantastic week. Thanks so much, as always, for following me and my work. And remember, it's always a good time to own good charts. Have a good one.